Welcome to this video. In this video I'm going to be making a stock analysis of C3 AI. So if you like this video, please don't forget to leave a like and subscribe. Now if you don't know what C3 AI makes, well, it's packaged software technically, but overall it's an enterprise AI company, meaning they do supply chains optimization, management predictions, and so on and so forth. And I like them quite a lot because they're a revenue-based model. So say you own a company who can't afford to build your own AI from the ground up, well then you can use C3 AI's product. Now, as you can see, the graph currently is not that great. As you can see, we're trading down here at 17.85, which is quite low compared to previous prices recently. Now, if I make each candle 4 hours instead, as you can see, the last time we were trading this low was all the way back in 23, so chances are everyone sitting here is sitting at a loss. Which means right now is of course a great opportunity to purchase some if you have a huge loss, and then you can reduce your overall price. But if you purchase down here, then again you're still sitting at a gain, but overall chances are most of the people in this stock right now are sitting at a loss, which of course is something be a bit careful about, because of course then you don't know how patient those people are wanting to sell. Maybe they don't no longer believe in the C3 AI business model. Now overall, let me just make each candle an hour again. Now overall, I do think it's a decent company. As you can see, the earnings here have been decent, up by 20%, up by 48%, up by 62%, and up by 62% again. So overall, it is quite nice. Now the market cap for this company is relatively small, as it only has a market cap of $2.34 billion, and the beta in this stock is absolutely huge. Now if you don't know what beta is, that is how volatile a company is, and the higher it is, the worse it is. And this is very, very volatile, as you can see right here. Anything above 1.4 is a very volatile stock, as the average index has a beta of 1. Now, and you can probably see that right here. I mean, just look at how this fluctuates all the time, up and down. And also down here in the RSI, as you can see, recently we had this huge sell-off, and we were all the way down at 7 in the RSI. Now, if you don't know what RSI is, that is the relative strength index, meaning which way is a stock moving at any given time. Now, if something is between 50 and 30, meaning this stock has downwards pressure or momentum, meaning stock is falling, and if it's below 30, meaning a lot of sellers are in the market right now pushing the stock price down, and we get down here to oversold territories. Now, sometimes it can be quite a good idea to pick up down here, but when it's down here in oversold, it is very, very volatile, and it's the exact same up here in overbought. Now, if you're above 70, you're in overbought, meaning the stock can rise rapidly like right here, but then again, it can tank down. And then again, if you're between 70 and 50, where we want to be, it has upwards momentum. So right here, as you can see, the stock is moving upwards nicely right here, and it is high in the RSI. That is what we want to see. We never want to really buy when it's down here and up here. Now overall, for the technicals in this stock, if we just make each candle a bit bigger again, as you can see, we are lying on previous support levels right down here, as we have seen previous support levels right here. As you can see, the last time we peaked out was also right down here. Now, if the stock price were to increase, the next proper breakthrough level to right around here, which of course means we need to be up about 10 bucks, or that is about 50% or so. So of course it needs to rise quite a bit. Let me just make this another color so it's easier to see the difference. So the next breakthrough point is up here. So if we're gonna break through up here, chances are we're gonna see, of course, some early highs, but overall it is a very volatile stock at the moment. Now, if we go and hit the income statements, as you can see, they are increasing more and more and more. Of course, the net income is also falling a bit sometimes, but that's of course because they need to make investments. Now the financial of this, as you can see, subscription services right here, that is the bulk of their income, and the professional services, that is of course when you need to grab hold of C3AI and need something more custom made. And as you can see, the countries they're in, they are in quite a lot of the countries in the world. As you can see here, Europe, Middle East, and Africa, that is the light blue one, but overall they are primarily in the United States, and they also have some contracts with the United States itself, which of course is nice to see. Now the overview in this stock, they have not that much debt, which is of course lovely to see, as they have a lot more cash and equivalents than their debt is, which is something we love to see. Now we don't even have a PE ratio at the moment, but we have a price to sales of 6.3, which is quite decent, to be honest. Now if you go into the seasonals of the stock, as you can see, it was first publicly traded back in 2020. It has been quite some rough years sometimes. As you can see, 21 down by 71%, then 2002 down by 65%, then this year down by 48%. Then we have some years with huge gains like 2023, and then some other years with great gains as well, like 2024 up by 19.8%, and 2020 up by 38%. So overall, it is a very, very volatile company, and I would not recommend you to purchase this stock if you don't like any volatility in the stock. Then this stock is not for you. Now the technicals for this stock, as you can see, for the day it's a sell, and for the month it is a strong sell, and that is of course because it is still falling rapidly. Now we do have this huge gap in the stock right here, which the technicals can take into consideration, but overall still this huge gap is not a great thing. And we also have a death cross right here, which is when the short-term momentum is worse than the long-term momentum. Now the analyst rating on this, as you can see here, they're quite mixed. 3 strong buy, 8 hold, 2 sell, and 4 strong sell. So overall, it is to the negative side. And to be honest, I don't know where it's going to end up in the end of the year. Now, this up here, that is not going to happen. I don't believe it's going to rise 124%. My personal goal is about maybe a bit lower than this. I would say about 20 bucks, so or 15 bucks. So I think right around where we are currently is decent. We need to see how this develops more with the subscription-based model. Now, annually, their EPS is estimated to be positive in 2027. Of course, we hope this is true, but of course, we won't know. And their annual earnings, they are also increasing that rapidly more and more. But as you can see here, overall, the revenue, again, still, it is not even hits $1 billion until 2028. So that's something, of course, you need to be wary of. As for a stock company, that is very, very little. Now, if you like this video, as I said, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice. This is purely for entertainment and educational purposes.